Sorry about that. All right, so a little bit about Bitwise. We have about 15 billion in client assets, founded in 2017 by Hong Kim and Hunter Horsley. Today we have over 120 employees and over 40 products. We have a lot of crypto ETPs across Europe, and actually this week it was a very big week in the UK because finally we've got the retail ban for products like ours has been lifted, and the products from us and from other issuers are now available on the LSE and for retail investors to invest in as they see fit. I'm one of the 5 execs on the executive team at Bitwise, and as I mentioned earlier, I look after Europe. Just want to mention a little bit about our backers, Stanley Druckenmiller, Henry Kravis from KKR, Electric Capital, Coinbase. There's a lot of big names here, and these investors are very much involved in the company and help us. And I mention that because it's important, actually. It's important for who we are. As I mentioned, we're a pure digital assets asset manager. We don't do anything else, and we consider ourselves to be experts in the space so that we can help investors on this journey. And just to get cracking, so this year has been a really interesting year. We've seen gold go on this crazy run, and Ethereum has done incredibly well, and I'll talk a little bit more about that. The actual, just going back to the topic, it's why Bitcoin, why Ethereum, and look at the investment case for crypto's heavyweights and their challenges. That's kind of what I'm going to cover. I've only got 15 minutes. I'm going to fly through some of these slides, so please stick with me. But if you want any of these slides, or if you want any more information, please get in touch. And also, I recommend highly that you subscribe to the CIO memo, which Matt Hogan, our CIO, writes on a weekly basis, and it's brilliant. I don't know, he always comes up with the goods every week. So Bitcoin has had a difficult time. One would have thought, talking about this, the trade that's been, a lot of people have been talking about, and the debasement trade, people concerned about the unchecked expansion of M2, printing of money, basically, and the, as we saw in Julian's presentation before, the decline in actual wealth, in real terms over time because of inflation, because of the fact that the currencies are being debased. Gold and Bitcoin have become these sort of safe haven assets, these products that offer protection against debasement. And I think the only reason why gold has really exploded this year and Bitcoin has not is simply about adoption. Gold has been around a long time. People have been investing in gold for really hundreds of years, and there's muscle memory. Things are going wrong. There's problems in the world. We buy gold. Worried about debasement. We buy gold. And Bitcoin, even though in a lot of ways it's better than gold for that particular trade, it hasn't responded in terms of price action simply because of the fact that it isn't as widely accepted and widely adopted in the institutional investment realm. And that's changing, and hopefully we at Bitwise are helping in that story, helping to educate and get people comfortable with crypto. So seasonality is a thing that we see in a few different asset classes. We've seen certainly with S&P 500 actually follows quite a similar chart to Bitcoin. This is Bitcoin seasonality. And October, everyone loves to call it Uptober, has been Downtober this October. There's still 2 weeks left in the another week and a half left in the month. So hopefully there can be some sort of turnaround. But the reason behind that was really the massive sell-off that happened as a result of a tweet about tariffs in China, and it shows that Bitcoin is still viewed by many as a risk asset, behaves like a risk asset. But however, in the long term, we continue. Our price position at Bitwise for prediction for the year is at 200,000. which may seem a little bit unlikely at this stage of the year, but really the fundamentals behind it still hold true, and certainly, it's certainly possible, and I'll go into a little bit more about that now. Now, I don't need to talk to this audience too much about Bitcoin, but it certainly is a different animal, and the debasement trade has been it's been super interesting. We have seen that over time that the M2, the price of Bitcoin tracks the lag by 90 days, tracks the Bitcoin tracks the expansion of M2. And so right now we're in a period where it's decoupled, and it's actually trading kind of sideways. Bitcoin is the green line on that chart, and we expect at any point now that it will recorrect upwards, and it's a little bit like a coiled spring at the moment, Bitcoin. So we expect to see that change happening. And at the same time, if you look at the chart on the right at the bottom, we can see that now those are showing drawdowns on treasuries. We're currently living through the worst period in the history of U.S. treasuries, and so there is real concern about that. And the place of U.S. treasuries in the portfolio has been questioned. It was always considered the safe part of a balanced portfolio, the less risky part, and that's really now in question. And people are starting to think about crypto and in particular Bitcoin in terms of this portfolio theory. Now, what we have at the moment now with Bitcoin is something that we actually didn't really think about when we started, ETC Group, way back in 2019. We never ever thought that corporates would be a huge buyer of Bitcoin. That was something that really took us by surprise. We thought they would be there, but we didn't realize that they would be such a big buyer. And so the idea of these corporations holding Bitcoin on their treasury, and some as a pure play like Strategy, and many others, but then others who are just holding it. And so this chart that you see here is is showing you the growth of for listed companies. So that's only corporations that are publicly listed. There are many hundreds of other companies that are holding Bitcoin on their balance sheets, but are not being tracked by these numbers. And on the right-hand chart here, you can see that corporations have over 1 million Bitcoin. So that's 5% of the total supply that will ever exist is currently owned and held by corporations, and they continue to grow. And this has become like a structural bid on the price of Bitcoin. And now these two charts here, the gray box is the same amount for both, but it's just because of the proportions are different. And the chart on the right is showing ETFs. This flows into only US spot ETFs, so not European or Asian or Australian. And we can see that compared to the new Bitcoin supply that's being mined this year, the ETFs are buying up all the Bitcoin, as are the corporations. And when you combine the two, you can see it's actually it's like 7.5 times the supply is being consumed just by these two groups of buyers, just by the institutional demand, which is the Bitcoin treasury companies and the ETFs globally. Now this is the global number. So it's a secular trend. It's continuing. It's growing. And ETP flows have been one of the key drivers of the price of Bitcoin more recently. Now, just moving on to ETH. So Ethereum is a completely different story. As you know, Bitcoin, it's around scarcity. It's about this kind of the safe haven asset, this global, this reserve that people want to hold on, whether they're sovereign or individual, and part of the debasement trade. Ethereum is more of it's a tech story, and I think a lot of you know it well, so I don't have to go into any of the details, but it's been a remarkable performer if you're viewing it through the lens of a tech stock, insofar as that actually It's surpassed 10 billion in revenues in 7 years. So that is better performance than all the biggest companies in the world, the biggest tech companies, Alphabet, Meta, Zoom, Salesforce, Microsoft, Adobe, and so I think we often in crypto we look at things kind of more insularly and not in terms of how is that, in terms of other companies, and it's really has been a remarkable performance in terms of the income that it's earned in the time that it's been around, which is only 10 years now. And the amazing thing about Ethereum is the total addressable market is huge because it's doing so many things for so many reasons. This platform that has got so many applications from arts and collectibles to gaming to music, healthcare, social media. It's there for everything, and there's stories, and there are people who are building on this blockchain. It has the most developers, famously, out of any cryptocurrency, and this is. It's the network value, for those who students of Metcalfe's law. It's been phenomenal, and also it's a metric that can be used for valuing the for arriving at a value for Ether itself. And like Bitcoin, more recently we've seen Ethereum also having a structural bid insofar as the rise of the ETH DAT has been growing. Companies like Bitmine and the Ether machine, buying up Bitcoin and consuming more and more of this of the supply, the available supply, many multiples of the new supply, and it's a super interesting phenomenon. Now. So I'm going to get onto, after these slides, why this is important for portfolio analysis from an investor's perspective. Why include ETH or Bitcoin or anything else into your portfolio? So that's kind of where I'm going. I've got, just a few more minutes, so I need to rush through these ones. So this is really stablecoin market cap. You can see that for stablecoins, this is what's underpinning ETH's growth at the moment. It's dominant in stablecoins today, and of course, whenever there's a transaction, there's revenue that's being earned. It's also dominant in tokenization of real-world assets. That's the chart on the right, and really, stablecoin is just another tokenization. It's a tokenization of fiat currency, and then of course there's DeFi And DeFi, as I mentioned, Ethereum has got a huge network of developers building all sorts of applications. And so those three pillars, and then of course, what's driving Ethereum's incredible performance this year. And then on top of that, you've got these ETH DATs that are buying up the supply. A lot of people say Ethereum is digital oil, and I think that's a great analogy. It's a lot of things to different people, and it's fueling the economy, the growth. And so, and of course the ETP flows as well, also helping the Ethereum story in terms of price performance, especially now. In the US, Ethereum is one of only 2 cryptos that is allowed for ETFs. That's changing now with the generic listing standards that have been approved recently by the SEC, and also, as I mentioned before, with the FCA lifting the ban for retail investors, you can buy Bitcoin and Ethereum products for your ISA and SIPs, or just for your general investment purposes. So what does it mean for portfolios? So just firstly, it has just a comparison of the two. It's quite interesting to see, where's fee capture, token holders capture with Ethereum, with Bitcoin. It's really all about price improvement. The miners are the ones who are winning in terms of the fee capture. But this is kind of the sort of the really interesting part. Okay, so this is, if you look at Bitcoin on those charts there, Bitcoin and Ethereum have really outperformed at an index, this MSCI Digital Assets 20, it's a basket of 20 cryptocurrencies. All three have completely outperformed the best assets out there before. Julian mentioned this in his speech before. And it's been a remarkable period for people who are starting to wake up to the investment potential of crypto, and including Bitcoin or Ethereum or even a basket into a portfolio of assets is super interesting, because what we see is that the performance of the portfolio by adding, this chart shows 1%, 2%, 3%. It greatly improves the performance of the portfolio, but at the same time, the risk-adjusted performance, the Sharpe ratio, increases considerably. But the max drawdown, if you look at that bottom line there, it only moves from 15 to 16.4. So the drawdown, this is the negative volatility of the portfolio, is hardly moving. So you're getting all this upside potential by just adding, 1% or 2% into your portfolio without, much volatility change. In the second line there, you can see it only goes up 0.5 point. And it's fascinating. This chart shows with 5%, the more you put in, the greater the vol, but it's not crazy. It's totally manageable. And the max drawdown goes up, but it's not a lot. It really is. So, even 5% of your portfolio is completely manageable. And look, we see very similar numbers with Ethereum. And as I mentioned before, if you introduce an index of cryptocurrencies as well into your portfolio, the performance is there too, and you have similar characteristics where the Sharpe ratio goes up, your risk-adjusted return rises, your Sortino improves as well, and the max drawdown only increases a little bit, and the vol as well. So I don't know if we have time for questions, but thank you very much. That's the end of the presentation for today. Any questions? I think we're good. Oh yeah, one over here. Yeah. Sorry, who's selling Bitcoin? That's a great question, and it's a question I often think about. But I think there's two groups, right? There's whales, people who are very early who are selling, and they selling to fund their lifestyle, whatever it is, Lambos, yachts, new chalet in Verbier. But also the other side of it is I think actually, unfortunately, a lot of retail investors are selling because they've got bills to pay, and that's kind of an unfortunate thing. They've bought some Bitcoin quite speculatively, delighted that it's over 100,000, and are actually the entry liquidity for a lot of new investors. So I think that's who's selling at the moment. Okay.